Hey fam, it is Uncle Doug this day on the 18th of September at 10:15. We're making this video. You can catch me at all social media channels at I Dig Mortgages. Please like, share, and subscribe and follow and all that good stuff. We're talking about the Las Vegas and Henderson real estate markets today. We're also talking about mortgages. Mortgage rates are finally starting to crest and come down. They have been for the last little while now, last month or so, 2 months. Today, the Fed is announcing whether or not they're going to drop the rates by a quarter point, or some estimate it might be as much as a half a point. To satisfy all you trolls out there that want to jump on this, the Fed does not set mortgage rates. They set their own rate, but there's a correlation there, and there's a tie that rates all tend to move generally together, even though there's a bunch of different indices and each one does its own thing, like the CMT, prime, the Fed rate, etc. So, having said that, we'll have another video this afternoon talking about what the Fed has done and what we expect to see and what we hear from them for the up and coming end of this year, Q4, fourth quarter of 2024 into next year. Alrighty, so let's look at the housing market in Vegas and Clark County. Now, Clark County goes all the way from middle of nowhere through Vegas and Henderson and Boulder City and all the way down into Laughlin. I heard an interesting, I heard a realtor talking about that. Inventory is exploding on social media, and I could not figure it out, and I finally did, because that's not what I was seeing at all. But he was factoring in condos. Generally, when I was doing these reports, I was only looking at houses. So we'll pull up that data as well. So let's jump right in. Clark County in general is still a seller's market. It's not a gnarly seller's market. It's what we'd call slight, but there's still more buyers than there are houses. So that puts upward pressure. As I've been saying for 2 years now, if you're getting ready to buy a house, do it sooner rather than later. We have a shortage of houses listed in this area. We have not kept up with the demand. We're absorbing buyers from all over the country. Many are coming in with cash, coming out of California, Oregon, Washington, New Jersey, New York, and other areas. So if you're going to get in, be serious. Let's not just get you pre-approved. Let's get you underwritten. So when everyone else is saying, I'm pre-approved, we're going to be able to say, hey, my guys are done. We need title and we need appraisal, and bam, we can close in 2 weeks. Let's rock and roll. This is where you want to be more aggressive than less aggressive. Less aggressive people are going to find themselves still shopping months after they started. Okay? You need to surround yourself with an exceptionally competent team. Reach out to me. I work with some of the top realtors in the area. I'm happy to put you in touch with a couple, and you can decide who's the best fit for you. So, again, we're seeing inventory, and this is what spun me out when I saw this other guy's report, is he was saying inventory had bumped. For houses, we're not seeing that at all. It takes a lot of work to build a subdivision of houses. Condos are a lot easier, and if we go back up here and toggle over to the condo market, you can see that it's squishier. We're closer to equilibrium, and we're definitely seeing an increase in volume as far as the number of number of condos on the market. 2,000, and at our heyday, we were at 2,500. So we're not that far off. Maybe we're at 80% of where we were, maybe. You're going to start finding better deals in condos here coming up. But when rates drop by 1 point, the National Association of Realtors expects that as many as 5 million more people qualify. So if even a small percentage of them jump into the market, and with rates lower, that's a lot of upward pressure on demand. A lot more demand, static supply means higher prices. Econ 101, right? Let's look at Vegas Valley or Vegas proper. Same thing. It's pretty much a seller's market. Prices are kind of slowly climbing. If you look at the trend line, we're definitely seeing a climb. And if you look at inventory, we're seeing that there hasn't really been much bump in inventory. We're at 5,000 in 2022. We're only at 3,000 now. So we're only at 60% of where we were. We are short on single-family homes. If you're looking at condos, again, we're starting to get into that squishy range where we're almost in equilibrium, right? We have enough condos to satisfy the buyers. Condos are a lot easier to build, I'm an ex-builder. I built a 100-home subdivision before, and obviously condos, you need a smaller plot of land. All your trades can come in. Concrete gets poured, obviously a lot less cost, obviously, because you're putting a lot less foundation in. And then we go vertical, generally, at least 2-3 levels. And so it's much more efficient because the framing guys show up, the plumbing and electrical guys show up, the drywall guys show up, and boom, it goes up fast. So lot more efficiency there. That's why you tend to see the lower cost, less land cost. And again, we're seeing inventory climbing there. That's a good thing if you're in the market for a condo. And then finally, and this covers, the Vegas covers all of Henderson, Southern Highlands, a lot of the outskirt areas. It's all kind of lumped into this category. And then if you look at Henderson proper, little less pressure, but still not cooling off anytime soon. We've seen a little bit of a bump, but not nearly where we were. We're still off by a pretty considerable amount. We're probably only at 70% of where we were. And if we go and switch that over to condos, well, condos are the condo market's still pretty strong out in Henderson. You got 250 units out there, and as far as inventory, we're only off by 20 units compared to where we were. And even later, even back in 2019, we're only 30-40 units compared to where we were back then. So this is the market in a nutshell. I want to also encourage you to tune in to a Zoom presentation we're having for the most powerful loan you've probably never heard of. This is a loan for qualified borrowers. 700 FICO score, money left over at the end of the month. You've got some reserves, 401k, gold stock, bonds, whatever. You're not utilizing it for the loan. You just they want to lend to people who have a safety net, so to speak. Have some wherewithal that if they get into a jam, they have assets that they can get themselves out of said jam. But it is called the Home Select product from Geneva. We've had it for a year. This loan has been around for 20 years. It was brought here by Richard Branson of Virgin Records, Virgin Atlantic fame. And this loan was originally used by the big financial houses, AIG, Ameriprise, Merrill Lynch, etc. And that's back when they had their own mortgage divisions, and their money managers and financial planners would send their high net worth clients to their mortgage guys to put them into this product. And now over the last 10 years, it's been opened up for everybody. This is an interest cost savings loan. It's the most flexible, powerful, disruptive loan available, which is why you probably haven't heard about it. Big banks hate this loan because the average client pays off in 7 to 12 years instead of 30 years. And the amount of savings, I have a client that's going to save $1 million on this loan versus the 30-year amortizing loan that we could have put him in. $1 million. He'll pay off his house in 4.5 years. He'll have $1 million line of credit free and clear, and he'll have his $1.5 million house paid off free and clear. The comparison effective APR on that loan was I believe, in the low twos because of how this loan works. It's a first position HELOC, which is super flexible and gives you liquidity and flexibility, unlike a 30-year amortizing loan. I encourage you to tune in. And all you have to do is go to gohomeselect.com. Okay? I have it typed in right up here. We're going to hit enter, and it's going to take you to this website. There's that handsome guy right there. Go to the More tab. Go to Zoom presentation. It's that easy. Put in your name and email information, and then you click this button right here that you agree to let us communicate with you. It's going to be that easy. We're going to get this done for you. Tune in next Wednesday, the 25th at 6 p.m. We'll be doing these every 2 weeks, but trust me, this is a loan you want to know about. Let me pull up my little trusty-dusty disclaimer here. This is our Geneva financial disclaimer. Thanks for tuning in. Again, you can find me on iDig Mortgages on all social media channels. Please like this video. Please follow me. We'll be having an update on the mortgage rates later today once we hear the Fed speak. Have yourselves a great day. Be the change you want to see in the world, and be a good human. Have a great day.